Hello, ladies and gentlemen. Welcome to the Handa show. Here we are. We're going to talk about ESG today. It seems to be the latest craze that all the investors are obsessed about. I see it in news all the time, and I'm going to discuss it with you today. If it's any good, if it's worth your money, if you should even bother about ESG. Is ESG investing any good? Is it as good as the fund houses advertise it to be? Do you think it's going to improve society? Do you think it's going to improve social conditions? Remember one thing: the rules with which these companies are rated, they're not yet standardized. So you could be spending money and buying ESG funds thinking that you're doing good, but the companies that are in the fund, they still might not align with your own personal values and ethics. My main problem with ESG investing is that the rating agencies don't have standardized rules, and the rules change from one rating agency to the other. You could have some funds in which you have fossil fuels, and then you have some funds in which you don't have fossil fuels. Some people think that these are early teething troubles with ESG, and as the industry matures, as there are more funds that come up, standardized rules, standardized sets of measurements will come about. But the thing is, if there is consensus in society as to what is good for society and what is not good for society, why do we need these high pundits on the Wall Street lecturing people what to do and what not to do? Because people will do that anyways. The groups that are most interested in ESG investing are millennials, women, and HNI investors. Millennials are going to inherit about $80 trillion worth of assets just in the United States. Women are educated now. They are increasingly heads of households making the decisions. And HNIs, well, the name says it, they have a lot of money. The fourth constituency that's most interested in ESG investing is the fund houses themselves. Well, I don't blame them. They have to make money. They're looking for their own self-interests. So how can you know if ESG investing is just a passing fad, or it's an opportunity for you to do good and make some good acceptable return in the process? Do you remember Bitcoin, real estate, dot-com bubble, BRICS, Y2K? I remember them. I've seen all of them. I'm like the grandpa millennial. A lot of people, when it comes to investing, they lose their rationality when they look at concepts like ESG, because all of us, I personally believe, are inherently good people. We want to do good. We want societies to do good. Also, a lot of people, they are subconsciously very indoctrinated by religion, and they want somehow good to win over evil. Well, if life was that simple, it would be good. So in the past, a certain group of investors, they have come to this conclusion that you avoid tobacco, alcohol, gambling, and increasingly fossil fuels. And they have this thought process that by avoiding these companies, they will do good for society and somehow massage their God complex. Well, these industries have not gone away. The clients continue to persist. And because a certain group of people has avoided these industries, the industries have themselves produced market-beating returns over a long period of time. When oil was a new industry, it might have ranked very high on ESG because it prevented the whales from getting extincted. We didn't need no whale oil no more. In today's world, a lot of these ESG companies rate oil and gas companies really low and Facebook really high. What would you rather have? Lights in your house or Facebook on your phone? If you plan to invest in ESG funds because it aligns with your values, you might need ESG from some random person in your old age, because a lot of research has shown that companies which have higher ESG scores, they don't really make as much money and their returns are poorer compared to other companies. So a lot of people, when they buy stock, they don't understand stock investing. They think that they are providing the companies capital to perform their day-to-day work, and by depriving them of capital, the companies will just vanish away. It doesn't work like that. Stock is just people exchanging stock with each other. And you are not providing capital. The companies are not raising capital, so it doesn't hurt them. It only hurts you. The biggest difference you can make if you want to hurt an industry is stop using its products and services. I personally believe only companies who care about their employees, customers, and suppliers anyways thrive in the long term. If you don't care about other people, you are not going to do good. That's the reality of life. So I've seen a lot of these gurus come on TV and they say ESG investing is really good because the companies provide market-beating returns. Some of them say that. But I went through a few lists and I saw most of the companies that were ranked high on the ESG scores either had great brands or were in very competitively advantaged industries like fintech. So these companies, they make above average returns compared to their own peers in the industry. And because they have more money, they tend to treat their employees better. They tend to do good for the community and not the other way around. So if you are looking for companies that are doing good for the community or doing good to the employees, they might not be making money. The better strategy is you make money and then do good personally or through an organization. Don't confuse business with doing good. So usually whether a company does good or not depends on just two factors. You have to have industry leading returns, and then you have to have some kind of moat with which you fend off your competition. And the pundits now want to add a third factor, ESG, which is not standardized, can't be measured, is nebulous. So there is a lot of fudging that companies do to rank higher on the ESG scores in Europe, in Japan, in which you can have green bonds at negative rates. So the companies can raise money at negative rates with no cost to themselves. So it's a great thing for them. To conclude, I think ESG is a nice idea for consultants, for rating agencies, and for the companies that are issuing ETFs and mutual funds. I don't think it's a nice idea for investors like you and me. So if you're investing in single stocks, look for companies that have high cash flow. That's all that matters. Make that money, then help your family, help your community. You will make a way bigger impact than delegating your responsibilities to some CEO or some board members through whom you want to do good. It doesn't work like that. You have to get out and do the dirty work. So don't fool yourself into thinking that ESG investing will solve all your problems. You will do good to the society. You will do good for yourself by having a high return. It's not going to work like that. A lot of fads have come and gone. Like look at BRICS. Where are BRICS today? What did BRICS stocks do in the last 15 years? BRICS was a big fad in the 20s, early 20s. Where are they today? Nowhere. If you look at the ESG funds, the companies actually charge you more to invest in these funds compared to index funds. I thought they were better people and they would probably charge you less money because everybody's trying to do good, but they don't do that. They charge you more money. The funds are less diversified because a lot of companies don't make the cut because they don't have high enough ESG scores. And then the companies that are part of the index tend to have higher multiples because people bid up the prices because this is the flavor of the season. So all in all these factors lead to you having poorer returns going forward. So I did a lot of research on it, and some studies show that ESG investing make market-beating returns. Others show that sin stocks make market-beating returns, and there are yet others that point in no direction. Always remember, most of these studies are agenda-driven, and always take them with a grain of salt. Don't read two studies and make up your mind and you bet your retirement on it. The bottom line is there is no easy way to make money. You have to work hard. You have to use your brain. And there is no reason why it should be easy. So before you judge me as a human being, let me tell you, I want people to do good. I want the companies to do good. I just don't want them to act as if they're doing good and don't do anything. I personally think that going the ESG route, it's not going to do anything, and it's not a good way to achieve anything or solve any societal problems. Most of the stuff that's happening in the investing industry, especially in Europe, in Japan, and it's trickling into US, is not just greenwashing, it's hogwash. Don't do ESG. Listen to me. Persist with the S&P 500 index fund. You will do good. If you have any other questions regarding ESG investing, please comment below and I'd love to answer them. Preparing this lecture and recording this video is making me reminisce about Milton Friedman today. See you in my next video. Till then, happy investing.